Yeah, I don't really mind these last 3 days, 2 days being a little bit red. I think it's quite healthy. It just feels like there's a little bit of profit taking in this consolidation range. And after you have an expansion, you kind of want to see that. You want to see some kind of take profits. And as long as we're holding the highs, that's healthy. That's pretty healthy. It's like a flat correction. And I think there's probably one more move in this kind of move up. You know, the price always moves in waves. And, you know, you could argue that's one wave, it's 2 waves, maybe there's another wave coming, you know. That's kind of what I'm seeing. Now, yeah, as long as we don't come back underneath this high, I'm okay. I wouldn't consider that as bearish. I would consider that as just going down to collect more liquidity to go back up, and I would expect that kind of behavior. So, and the good thing about if we were to come down that far, that's pretty far, but if we were to come down that far, you're going to trap a lot of shorts on the way up, which will squeeze. And also you're coming into this red candle, which I would consider as a good place for people to place their limit orders. And you have this kind of daily level. I don't really like these kind of intermediary daily levels kind of in the move. I like these ones where the price comes down and then goes up. I don't like the ones where the price goes up and then goes up, but still the context is key. And because it's above a previous high, I would consider that as quite a good one. But generally speaking, the daily levels that I really love are the ones where the price is coming down to go up. And so you see there's a really nice daily level down here. So if the price was ever to, for some reason, God forbid, was to ever to come down there, then that would be a really amazing buy opportunity. Yeah. So just there's something to bear in mind, but doesn't mean it's bullish. It just means it's a good buy opportunity. All right. On the local time frame, I had some stuff planned. Nothing came about from yesterday, which is fine. If you have a plan and if it doesn't work, doesn't matter. We're kind of coming to the end of the time of this plan because I've done it based on fib time. I like my triangles to be equal. I don't like lopsided triangles. And so what I did was I created some kind of fib time. And I just, I wanted it to land here on the 4, roughly here, which is now. And so if it doesn't kind of land, I'm not necessarily going to consider it. And then I'll just start looking for something else. So that's just the way it works. When it comes to trading, you make a plan, and if it happens, it happens. And if it doesn't happen, it doesn't mean you're wrong. It just means that it didn't happen, so you didn't take the trade. And it's you just look for a new trade, and that's just the way it is. And it's not a big deal. I would love for a swing failure of this low. I would love that. I would love that to happen. That would be a really amazing long opportunity, I think. And it would be a very easy long because you could just enter as the price comes back up. It would be such an easy long. And you'd potentially you trap a lot of shorts at the lows, and then the price would probably squeeze up. And so I would really love it if that happened. But I'm also considering the possibility of something else. It doesn't have to be what I think. It could be a diamond in formation, which is actually bearish because eventually it breaks down. So I'm just considering it. I'm not like saying it's going to happen. And then the other thing that I'm considering is some kind of flag as well. So for a flag to happen, you probably would want to take that low. That would be kind of what you want to do. Possibly. And then the other thing that could happen is we make a higher low here. quite simply make a higher low. It's a lot harder to trade higher lows because you basically have to have your invalidation here, and a lot of people are scared of doing that because they're worried that the price is just going to come down and liquidate them at the lows. Good morning, War. If I do a range pull here from this range from beginning to end, you can see that we're still underneath the value area low. So a sign of strength here would be to get back into the value area. That would be quite a strong indication. If that was to happen, you'd have a pretty easy invalidation. So you could actually long as soon as we reclaim the value area low of this range, and the confirmation would be 2 30-minute closes, candle closes, the first one and then the second one. That would be acceptance, and then you'd have a very easy invalidation, because then if we do recapture the value area low, you wouldn't expect, after you have acceptance, you wouldn't expect the price to come back down and start closing back underneath. Yeah, then you'd have a really easy invalidation for reclaiming the value area low. So there's an easy long up above us, there's an easy long below us. There's two easy longs here. One would be to reclaim the value area low and find acceptance, and the other one would be a swing failure off this pivot here. There's two really easy trades there, I think. And obviously if you're trading, then you would look to take profit from the SFP into the lows. You'd be trying to get your profit if it went up into the value area low, and if you entered on the value area low, then you'd be looking to take profit at the point of control. That's basically two easy long trades potentially that could happen. You just wait for those if you're looking to just trade. And then the most important thing about trading is taking profit. After you have an invalidation, the most important thing is taking profit. There's a lot of important things, but if you don't take profit in trading, you're never going to be a successful trader. It's just really that simple. So it's just something to bear in mind. That's trading, not long-term investing. In long-term investing, then just keep on buying dips. Don't even think about it and sell at the end. All right, so that's kind of my Bitcoin ideas. Because we are in the lows of this overall range, I'm not looking for shorts, I'm looking for longs, okay? And then obviously when you're in the highs, you're not looking for longs, you're looking for shorts. That's kind of how it works. Any questions? Is that clear for everyone? That's pretty much Bitcoin. There's nothing really to say about Bitcoin anymore. I'll quickly have a look at XO just in case I see something there. And then something that I've been using with David. I don't know if you guys are interested. There's this indicator called LevLLC in Silico. It's been recommended to me by a trader friend, and he uses it. He only uses it, doesn't use anything else. And basically it gives you exhaustion levels, which the algos use. I've been looking at it over the last few months. I look at it every day. It'd be good if anyone else has eyes just to have a look at it as well and see if they notice anything. But the idea is meant to be that on different time frames, you'll notice that you'll get these exhaustion levels of that print. And basically the idea is that market selling diminishes, and then when it becomes less and less, and you get these exhaustion levels, and then on the downside you get these I've got it red and white. So these are the white ones. So the red ones are the sell, the white ones are the buy. But sometimes what happens is you get these exhaustion levels that flip. They flip. I don't know. I'm just been looking at this indicator to see if I can find an edge. And so David and I were looking at this on a daily basis to see if we can find an edge based on this indicator and based on XO. charts. Have a look at XO charts quickly. So yeah, so there's, let me have a look. Is there any divergences first and foremost? There's clearly bullish divergences on the higher time frame. So you can see the CBD is going lower. That's market selling. And you can see the price is still higher. So there are shorts being, market shorts being absorbed by limit longs. That's what you want to see. There were some liquidations earlier on in the morning. You see that bubble, and then some longs entered, some shorts, and then some longs, and then the shorts got squeezed. These are shorts closing. These are shorts entering here. So there's a lot of shorts. That's a big short. This one here, 4.8 million. So there's a few trap shorts in these lows at the moment. That's what I'm seeing. Especially this big one here. It's like a 4.8 million. The price has gone down. Yeah, that's a big short that's been trapped in the lows right now. And so we have to see if that short either gets liquidated or they market close long, which will push the price up. David is saying turn on T size. Okay, there you go. Let me save that. Dominant order size. Oh, okay, yeah. So yeah, you can see it's shorts. See that? Shorts, red. So there's a few shorts there. There's some longs there and some big shorts there. So there's a few trap shorts in the lows right now. Okay, that's quite good to see, and we can see that they haven't closed out. And this price action moving up. These are shorts closing. You can see you see how the OI is dropping and the price is going up. The shorts are closing, which is pulling the price up, and that shorts closing at market. But we really have a few big shorts that haven't closed yet, and that really will push the price up. Okay, so we're not seeing like crazy longs right now. We had a few here. There's one big one there, a couple of big ones there, but no like crazy like longing like they used to be at the beginning of this range after the expansion. So we still have yet to see that, and probably that's going to happen in the highs. All right, so there's a higher time frame bullish divergence at play, and looking at this whole down move, the OI has been going up, so I think there's a lot of shorts in this down move ready to be squeezed. Okay, that's what it looks like to me at the moment. So let's see what happens. Once we do get acceptance back into the value area low, that will be a really good place to safely long, because then you'll have a really easy invalidation, and the invalidation would be to fall back underneath the value area low. You wouldn't want to see that kind of behavior. That would be wrong. That would be strength followed by weakness, and then sometimes you see that, and then you get sometimes this is what happens. So just want to show you what happens sometimes. Sometimes you get strength followed by weakness followed by strength again. So if that was to happen, you get invalidated once, but then the second time you'd be fine, and you'd have an actual market structure invalidation in place too. Yeah, or it will go up and it will hold and it will just go up. So that's kind of what you would see, or it would go up, it would go down, and it will go down. So you're basically looking at three things that could happen around a key level, like a value area low of a volume area. Yeah, and you just have to look out for that, and then you can trade that. You can trade that. It's not difficult to trade as long as you just wait for the acceptance, and the acceptance is 2 30-minute closes, candle closes inside of that area. I think that's BTC. Just looking for longs, actually. Just looking for longs. I would love for this to, for us to go down here, but it may not happen. And I've got this indicator, which I told you guys to have a look at. David and I are looking at this on a daily basis. And these are the settings. It's 310. And you can see now there's this white line is printed on the 30-minute chart. So that basically is saying there's an exhaustion level, which the bots use to close out their orders at those levels that are created. So it's just something I'm just keeping an eye on. And it does seem to give you levels which are potentially invisible. All right.